Welcome back. Well, we're joined by Dharmesh Kant, Head of Research at Chola Securities on the show. Hi, Dharmesh. Hope you had a good, long weekend. Well, quite a few numbers came out, so I'm sure you would be analyzing quite a few of them. Let me ask you about UltraTech Cement. You have your ear to the ground with regard to some of the cement prices, and you've been sounding us that off as well. UltraTech Cement's numbers were good, but the commentary is full on. They are very, very optimistic about the future. What is your take on UltraTech Cement? And from the cement basket, what do you like?
Yeah, good morning, Nigel. Thanks for having me for the show. Yeah, the numbers were pretty much in line, and they have seen a significant uptick in the EBITDA per ton for UltraTech Cement. And I think the volume growth is likely to stay, though even on a normalized basis, the volume growth was there. And what we are sensing out across pan India is that the volume growth of around near high single digit to early low tens will be there in Q4 as well, with slight, price uptake of say 2 to 3% on the blended basis. So that is what the sense is coming. UltraTech is the India's largest cement player, and they have been servicing the dealers very well. So their the ability to get the sales through on a more effective basis is what is being said. Valuations do sound a bit expensive. Management has been gung-ho quite for some time, and 1.5 to 2 years they have been sounding pretty bullish on the entire cement space. And they have also said that South can be the new North. So we have to see that. But India Cements also have been coming up quite nicely after it has been taken over by UltraTech Cement. So our sense is price-wise, we may not get that much gain for say next 2 or 3 months. But if your investors stay invested, the entire year looks pretty good for all the cement companies. UltraTech remains the topic out there. So 15-20% upside from here on, if your investor for 3 to 6 months, looks likely on the cards.
Got that. Dharmesh, good morning. Good to have you with us here. We just spoke with one textile exporter, Gokul Das. Prices down to 550 and others in that space. This trade-related hit that many companies across sectors have seen. You think that some of that starts to abate a little bit? The pressure starts to abate? It's not the US now, it's EU. But any thoughts at all? Anything where there is outsized opportunity?
Yeah, good morning, Prashant. I think the last word which you said, outsized opportunity, looks unlikely in the near term because US deal is still lingering on. It's not happening. We had just heard that there will be a margin compression. The tailwind is coming from the currency depreciation, it will mitigate some part of the margin compression. EU trade deal, even if it happens, it's likely to be beneficial from next year on the calendar year. January 27 onwards. So I think it's more of having the positive sound bites across the sector, but the reality and the fact remains that margins will continue to see a sharp pressure. And other countries, though Indian companies are trying to have their units set up in other countries, but they are also fighting back well, and they are getting a business traction as compared to India. That is what we have our checks suggest. So my own sense is trading impulses may be there. But from long-term perspective, this sector will be there for some betting in a medium to say 9 months kind of a time frame.
Yeah, Dharmesh, Rima is going to highlight some auto companies, etc. Right? We'll know the details later. But tariffs on EU cars, European car imports into India, they perhaps go lower as part of this trade agreement. Above a certain, I think it's 15,000. The reports that 15,000 euros is the threshold. Cars. Above that particular threshold, tariffs are going to be cut meaningfully. Maybe means more competition for Indian companies. Any thoughts here, especially for the likes of Mahindra, etc., Dharmesh?
Yeah, definitely. We have to see whether this is on EV vehicles or ICE vehicles, so that all details are awaited. But in case if it is 15,000 euro plus kind of, then definitely there will be a competition for all, 20 lakh plus car manufacturers in India. Mahindra will definitely be in for a tough competition. At the same time, even Maruti, which is trying to fall into the premium segment, will have serious competition along with Hyundai. So with the kind of price run-up which we have seen in all these companies, I think it's time to stay light. You can book your trading profits out there. But upward price traction and the 2 to 3 years kind of a perspective investment is definitely challenged if this comes through. But let's wait and see the fine print, and then only I think our detailed conversation can take place on this.
Okay, let's focus on the other name then from the Ferris pack, JSW Steel. Numbers pretty much in line, but the coming quarter will be far better. Last quarter, pricing was under pressure. In fact, it was at multi-month lows, the prices. Now that safeguard duty has come, and the prices have moved up by around 3,500 rupees in January itself, most of which will flow to the EBITDA number. What is your view on JSW Steel? The stock is not cheap valuation-wise, at around 8 to 9 times EV upon EBITDA, but it's been executing very, very well.
Yeah, Nigel, I mean, the execution has been there. At the same time, the market share traction has also been seen in JSW Steel. We have been recommending this company for last 3 to 4 months consistently. In the ferrous space, we have been liking JSW Steel among all others. I think operating efficiencies will also play in, and management has sounded very aggressive on the capacity expansion part as well. So keeping everything into perspective with safeguard 20 on, you can, I mean, it's still time to be long on JSW Steel, and infra play is on. Let's see how the budget pans out on the entire infra spending. If there is some positive trigger out there, then again, a good run up in JSW Steel is likely. So but these are the sectors, metals, banking, where we are fairly bullish on, and keeping them for 6 to 9 months kind of a trading investment perspective.
Okay, all right, Dharmesh, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC, and we'll speak again.